Hi everyone, it's Carol Dewey with Perpetual Wealth Financial, and welcome back to Navigating Abundant Retirement, where we help you make smarter decisions about your money so you can enjoy the life you've worked hard for without worrying about what Washington, Wall Street, or the world is doing this week. If you've been watching the markets lately, you know it's been a little like watching a ping-pong match. One headline sends stocks tumbling, the next sends them soaring again. Between President Trump's sharp comments on China and his reassuring words just days later, we've seen markets fall on a Friday and rebound on a Monday. It's been an emotional whiplash kind of week. But here's the thing. Markets have always moved this way during uncertainty. The key is not to panic, it's to plan. So today I want to talk about what's happening behind the headlines, why protection matters more than perfection, and how we help our clients literally sleep in peace even when the market doesn't. You've probably heard the phrase up one day, down the next, but lately it feels like we're living it. A couple of Fridays ago, markets took a hit after President Trump's critical comments toward China's leadership, sparking fears of renewed trade tensions. Then by that Sunday, he switched gears, assuring everyone that it'll all be fine, and stocks rebounded. This is classic election year volatility, political rhetoric colliding with economic fundamentals. Add in China's economic troubles, ongoing geopolitical uncertainty, and the Federal Reserve trying to navigate a slowing consumer economy, and you get this seesaw effect. Even big banks are showing a split story. JP Morgan and Goldman Sachs both reported strong investment banking revenue, but they're also building billions in reserves for potential loan losses. That tells us something important. The top half of the economy is still spending and investing, while the bottom half is struggling under debt. So what happens next? Likely the Fed will step in with rate cuts to provide relief, which is good for borrowers, but it also reminds us that we're walking a fine line between growth and slowdown. Now, all of that might sound concerning, but this is where disciplined strategy, not reaction, makes all the difference. A few years ago, I met a couple who had been through the 2008 financial crisis. They told me something that stuck. We sold when we couldn't sleep. That's the emotional trap investors fall into, reacting when fear is loudest. They didn't have a plan that gave them permission to rest easy. Our firm's approach, what I call the sleep in peace strategy, is built to prevent that. There's a great framework I came across recently from an analyst, Brian Hunt. He teaches that markets often give us clear signals before a major decline. Simple, visible indicators like a 6-month downside breakout, a falling 200-day moving average, or a pattern of lower highs and lower lows. These are not complicated formulas. They're trend signals that, when read correctly, allow investors to step back before a full-blown bear market hits. In other words, it's not about trying to sell at the top. It's about protecting your hard-earned capital so you're ready for the next buying opportunity. As Brian said, it's not so much about perfection, but rather protection. Following that kind of disciplined process helps sidestep the kind of massive losses that can erase years of progress. That's what tactical management is all about. We don't chase headlines, we follow evidence. Think of your portfolio like a sailboat. When the wind changes, you don't throw out the sail, you adjust the angle. That's what our tactical money managers do. When conditions shift, they rebalance, pulling back from sectors that are weakening and leaning into those with strength. For example, earlier this year, one of our defensive portfolios was intentionally designed with exposure to precious metals, mining companies, and natural resources. The very areas that have been quietly outperforming as uncertainty has risen. Why? Because metals like silver and gold often act as shock absorbers when inflation flares or markets wobble. And right now, silver in particular is showing remarkable strength. In fact, global demand has been rising fast, fueled by India's buying spree, tightening supplies, and even industrial demand tied to artificial intelligence and solar technology. Silver has the highest electrical conductivity of any metal, which makes it essential for AI chips, data centers, and renewable energy. That's a long-term structural demand story, not just a trading opportunity. So when you hear silver is breaking out, it's not just about investors chasing returns, it's about positioning for a world increasingly powered by data and energy efficiency. That's what I mean by defensive growth. Assets that protect your portfolio from volatility, but also benefit from real economic trends. Let me share another quick story. A client I'll call Tom called me last year during one of those steep down days. He said, Carol, I know the market will come back, but I'm tired of feeling like I have to watch it every day. And that's when we reviewed his plan. We had already positioned him with a balance of growth and protection, part tactical equities, part fixed income, and a portion in safe money mindset strategies. When he saw that even if the market dropped 20%, his income plan and guaranteed assets wouldn't change, he exhaled, literally right there on the phone. He said, I guess that's why you call it sleep in peace. It's stories like that that remind me investing isn't about beating the market every quarter. It's about aligning your money with your life so you can focus on living it. So let's talk about what safe money mindset means in practical terms. It's about diversifying across worlds, not just within Wall Street. We use strategies from 3 worlds of money, banking, insurance, and investments, to build truly resilient plans. From Wall Street, tactical portfolios that respond to changing trends. From insurance companies, annuities and life insurance solutions that provide guaranteed income, liquidity, and tax advantages. From banking, cash flow and credit flexibility for opportunistic planning. Together, they create balance, growth when markets cooperate, protection when they don't. The most successful retirees I work with aren't the ones chasing the next hot stock. They're the ones who've built a plan that lets them enjoy their life regardless of market headlines. When you step back and look at everything happening, politics, China, silver prices, Fed policy, it's easy to feel overwhelmed. But remember this, volatility isn't your enemy, unpreparedness is. If you have a strategy that accounts for both offense and defense, tactical portfolios for growth, safe money strategies for protection, then you can weather storms without losing sleep. Or as I like to say, it's not about predicting the next wave, it's about having the right boat. So, as we close today, here's your reminder. Protection beats perfection every time. Markets will keep moving up and down, but peace of mind comes from having a plan that moves with them, not against them. If you're ready to find out whether your current plan is built to help you sleep in peace, I'd love to have that conversation with you. You can visit www.perpetualwealthfinancial.com or give us a call at 877-434-6243. I'm Carol Dewey, and until next time, keep your perspective, stay focused on your purpose, and as always, navigate your retirement with confidence. And I will see you again next week.